Hello, great people of the world. Welcome to What Went Wrong. We are here sitting around, we're shaking hands. How I like to pretend like we're all in the same room for the sake of the audience, so we're here in the same room. How is everyone today?
Mike's asleep.
Yeah, my Mike is sleeping today. And yes, that's right. Who was that, you might ask yourself? Today we have KJ,
What's
beloved.
up?
Yes,
What's up, everyone?
he's here. Everyone is saying hello. Good. Welcome to the seminar. We're just sitting here in the same room, shaking hands, and well, you got a firm grip, Mike. Why are you gripping my hand so tight?
Yeah, Mike, that's creepy.
It's one of those things I do.
Is it like men are supposed to grip your hand really hard? That means you're like the bigger man or something, when people do that, they like give you the strong handshake. I always just let my hand go totally like dead
Like a
fish.
dead fish.
Total limp fish, and they just look at me and I can tell they're horrified.
It's creepy.
I
That's
want
how
them
hippies do it.
I want them to know I'm not playing your stupid masculinity games. I'm not going to do it.
There you go. You stand up to it.
All right, so welcome everyone. We're so happy you're here. KJ is joining us today from New York State. How's New York? How's everything, KJ? Tell us what's
It,
going
it's kind of cold. I'm not gonna lie. It started hailing out of nowhere today, so that was fun.
on.
Other than that, it's quiet in this little Amish town.
Yeah, you actually had a horse like come knock on your door. Like some Amish people came to visit you, didn't they? Like
That is true, and it wasn't the first time. He's been by 3 times. Same horse, if anyone's wondering. We are now friends, and he might be building our back deck, so that's interesting. That'll be fun.
Well, I've heard that a lot of Amish communities have amazing carpenters. Like I've heard that's not a stereotype. Like I've heard they can really those are great craftspeople to fix your house and stuff. I've heard that
Oh
many.
yeah. It's a thing. It's definitely a thing. So we're gonna do the thing and see what happens. Hope for the best.
Well, all right. Well, yeah. So today, now this screen is actually working. We are going to start with just a very brief introduction here. You guys are here. If this is your first time coming to the seminar, this is what went wrong. We like to talk. We all work at Blackbox Stocks, and we all actively trade. And everybody takes losses, and we like the general theme of this show is just open and honest discussion about sometimes we make losing trades, and we can't ignore that. We have to learn from it. So the idea is that we like to not just discuss that, but also go through user submitted trades, which is what we're going to start off today doing. And you'll see in the GoToWebinar panel in your upper right hand corner, most likely, depending on your device, you'll see there is one handout attached. That's got the information on how to contact us, how to submit a trade if you would like us to go through it and just get our perspective on the trade. Do that with the information in the handout, and that's where we're going to start today. We have some user submitted stuff. Mike is going to take us through it, and I'm excited to see where we go. But Mike, how'd you do this? How was your trading this week? Are you happy with it? How'd it go?
This week went very well. There were some choppy things going on. I got caught in some trades that the setup was a legitimate setup, and then it just didn't have momentum and reversed. But overall, I'd say out of the trades that were legitimately just dumb, stupid things, I probably only did 2.
Okay.
And all the rest that didn't work out were just legitimate entries that just didn't have the momentum to carry it forward. And those were closed for either anywhere from like 5% gains because I wasn't going to let it go red, or anywhere from a 5% to 10% loss, where a loss like that just isn't going to hurt me.
Yeah.
The downside was we're playing around in a small account. I put out a little small account challenge, and in that account, I actually took some losses in that didn't have the buying power to recover it.
That's right.
We're going to do a separate thing on small accounts coming up where I traded that a little bit differently than I would normally trade because you're so limited to buying power. And I can make, in my regular accounts, I can make a losing trade and not care about it because I know the next trade or the next 2 trades or whatever it is, I can recover that. So I can have a whatever percentage down, and then by the end of the day, hopefully I'm recovered and then profitable like I would normally be, even accounting for that loss. Whereas in the small account, I couldn't do that. So we'll focus something on the small accounts and the psychology behind that coming up, because that's a whole separate beast. So that account, I actually had some trades that went against me, and again, they weren't bad setups. They just didn't have the momentum. So I'm not mad at those particular trades. They just didn't end up working out. And then the other accounts that I trade, I think I've got like 6 or 7 accounts total. I keep bouncing between. So overall, it was a pretty good week. I'm happy with it, except for, like I said, there were 1 or 2 dumb things that I did, but overall, kind of happy.
Okay, number one, you don't do too many just straight up dumb trades. I'm impressed you even had 2. And number 2, you have 6 or 7 accounts. I have 2 and it drives me crazy. How do you, that's just
So I used to do a thing where different trades were in different accounts. So I could have a long-term swing account and I don't have to check what's going on. So in other words, I have an account where I have, let's say, 19 trades in them and 14 are swings. I'm going to be pulling up those charts just because they're right in front of me.
Yeah.
So then I went, okay, so any swing trade is going to be in this account. And I just won't open the account. So I don't have to see what's going on with those trades because I know there's 4, 5, 6 months of time on it. I don't even want to see what's going on today. So it won't tempt me to manage them poorly. So put them in an account separate where I just don't have to watch them. I'm going to do scalps and day trades in a particular account. Then I'm going to do flow only in one account and only technical analysis in one. So I got to a point where I just kept opening accounts for different reasons. And now I just bounce between all of them, confused as to what I want to put in what account. And it's an ongoing battle. I should probably consolidate, but
you open a lot of Robinhood accounts just for the free stock, right?
The day that happens is the day I will never trade again.
Go back to retail when that happens.
I would rather.
I wish Dear Trade Station, they're listening to this show because they listen every week. They are listening. Trade Station, I wish you could just hide trades you don't want to see or organize, right? Here's my swing trades. I will just make them not visible so I can just have my day trades up. So I wish that would solve the problem you just talked about. If we could just simply hide trades from our view when we don't want to look at them. So Trade Station, do that, Trade Station. And KJ, what about you? How'd you do this week? What was your trading like?
I had a really fun week. I did the $500 challenge that Mike was talking about.
Yeah.
And I learned a lot about myself, a lot. And I think the hardest part of the week was doing nothing. But then again, it was also the best part too. But doing nothing and waiting for it to come to you, the setup has to be there, and not just trading just because you're bored. That really helped a lot. I mean, Friday was fun. Very small, 3-4 candle setups. Went in, got out, locked it in, done. But like Mike was saying, when you run out of buying power, that's when it hurts. Because then something really big you may see come along and you're like, well, I'm out of buying power. I have to just watch it happen. But that's when I started another paper trade account for when I was out of buying power and just kept going on with that. And it's actually really helped just to kind of lock it in and wait for things to come to you.
Yeah, you're great about that. We were talking earlier this week, and you actually said that same thing. You said you don't trade a lot during FOMC weeks because there's too much chop out of it. And I thought, damn, that's pretty wise because it's too much chop for me is not a great thing because I want to go this way and that way, and I just need to stop. And you're great at doing that. The buying power thing. I think people stay in trades too long. I mean, I know they do because the idea is, okay, if I close this trade out, I don't have any more buying power. So sometimes very small account traders will, I think, stay in longer, right? Because they'll have more hopium maybe, and they'll violate their rules. Because of that, they don't have any more buying power. So I think it makes people, that's cool you guys are doing that. Because
you hear that a lot with PDT accounts. So anyone that's under 25,000, you should be in a cash account. That excuses you from limited to 3-day trades in a week, or rather in a 5 rolling day period. So a lot of what you'll hear in PDT restricted accounts is not necessarily buying power, but, oh, I'm out of day trades. And I hate when people say that, because you're never out of a day trade. You should be in a cash account. So as long as you have buying power, you can trade. You can trade 16 times as long as you have the buying power, even if you're under 25,000. So under 25,000, please set your account up to a cash account. You're not restricted to 3 day trades in a 5 rolling day period. And that's where you hear it most, is you hear that all the time. It's specifically quotes. I'm doing air quotes right now. I'm in this trade. I don't want to close it because I'm out of day trades.
Yeah.
And here's the thing, for those of you guys that are restricted and don't want to change for whatever reason, or you just happen to be under PDT, you can still close a trade you don't want to be in. They might restrict your account from further trading, but I'd rather have a restricted account and be out of a trade rather than be up. I've seen people,
No doubt.
this was years ago when I started, they were trading, like, they were kind of acquaintances of mine, and we would talk periodically, and they were trading bios, and they'd be up like 400% and over, an expected announcement or something, and the announcement doesn't come, and then they're down like 80% the next day, and they're like, oh, I was out of day trades, I couldn't close it. You can always close a trade.
Yeah, that's true. And here's an important question. Somebody asked, can you change from margin to cash? And yes, you can. You just have to call up your broker. And if it's a major, especially if it's a full service real broker, it's very easy to do so.
One reason we absolutely hate Robinhood is because even with the cash account on Robinhood, you can't do that. Robinhood forces you to use day trading restrictions because you can't trade options in their cash account. So
Wait.
Just another one of the 6,438,000 reasons to hate on Robinhood.
Are you?
What's Robinhood?
KJ doesn't even know. Dang, girl. You know what Robinhood is? It's hard. So what you just said is crazy to me, Mike. Is that really true? Like they don't allow that? That's just their rule, obviously.
Unless they changed it up, as far as I know, in a cash account, they don't let you trade options.
Oh, man.
So basically, if you want to trade options, you have to be on whatever they call their specific account, which is limited to pattern day trading rules.
Oh man, wow. Well, I'm over 25K in my balance, and I still have a cash account. So I would never use margin. It's not the type of trading I do. I'm just not going to do it. So I mean,
margin is, if you do the strategies, you need margin. If you're going to do certain things, you need margin. But if you're just trading buy to open calls, buy to open puts, if you're using margin, that basically means you're using money that's not yours. You don't have that much money. You're borrowing money. And anytime you borrow money to place a trade, that's typically, you're going to be hard pressed to find someone that says that's smart. That's just dumb trading. If you don't have the money, you don't trade. If you're borrowing money and lose money, you have to pay that back. It's not just here, trade with some extra money. If you borrow money and lose it, you have to pay it back. And if you don't have it to begin with, how are you going to pay it back?
Yeah, there's no doubt. I just keep enough cash in there that I'll never use. I have enough cash in my cash account. I'll never deploy that much cash. It's just never going to happen. So in essence, I just have this unlimited buying power, pretty much.
Yeah, that's the safe way to go about it. If you want to place a few extra trades, the buying power is there. If you just want to, place 1 or 2 trades, you don't have to stress over it. It's just, that's the way to do it.
What do you do, KJ? Are you cash?
I'm cash account. I'm too much of a control freak, and I like to know that what I have is mine. I'm not borrowing from somebody else. And if I borrowed from someone else and did something stupid, then I'd be responsible for that with somebody else. So I'd rather just be stupid on my own.
Yeah, be stupid with my own money, and I'm not going to owe interest to.
None of that. I don't mess with any of that. What's in my cash account, I can play with, and if it's not there, then you don't trade. But thank God, so far we're good.
Yeah, gotcha. All right, well, so like I said, everyone out there, TOS. So TOS, someone asked, someone mentioned TOS. I think they're pretty good about cash accounts, right, Mike? I think they're pretty free with.
TOS is one of the bad thing about TOS is their fills are the worst I've ever seen. It's probably Robinhood is the worst, and then Webull and all that, those garbage apps, and then TOS is right there with them as far as horrible fills. Outside of that, though, The thing I love about TOS is you can trade same day expiration like 10 minutes before the closing bell, and they'll let you do it.
TradeStation does not do that. You're
TradeStation closes out about 2 hours before the bell, sometimes an hour before the bell. E-Trade will do it sometimes, depending on it's basically depending on risk tolerance. Like their risk management can close trades at any point, but for whatever reason, TOS is the one that lets you trade, in my experience, like literally right up to the closing bell.
Yep.
E-Trade pretty much does that, but I've heard sometimes they will close out as well. TradeStation definitely doesn't allow that up to like the last hour, hour and a half or so. So there's upsides and downsides to all of the brokers, except Robinhood and Webull. There's no upside to those two.
All downside. TradeStation, the main thing I understand the risk tolerance and everything, but like if I've opened and closed several thousand option contracts over the last 2 years or whatever, like I'm not going to just let it go. Come on now, let me just keep it a little longer. But whatever, they don't, that's their policy. But the fact that they charge $75 to push a button and close out my trade, I don't like that at all. So that's enough of that though. Now, as I said, we definitely want to evaluate you guys' trades. We're about to do that. We're going to throw it over to Mike. We're going to see what some people sent Mike. I want to say first, tomorrow on Riverside Chats, I'm having T Lamb on the show at 6 p.m. So that will be fun. And Mike, you've been on the show. Did you have fun?
I did. I can talk for hours and hours. So if someone asks a question, I mean, who am I not to yap on and on and on? And that show is set up for yapping on and on and on.
Right, long form discussion. We had like 3.5 hours with Mike, and KJ has an episode coming up that I hope goes all sorts of hours and all sorts of places. But as far as today, you ready for it, Mike? You want me to throw you the screen?
Let's do it. I've got basically one submission on Tesla. So we're going to take a look at the account killer today.
Old Tesla. I tell you, we just need a whole episode to talk about Tesla. Tesla is an interesting. Do you trade Tesla, KJ?
I only trade Tesla on a Friday because I'm cheap. Hey, if we're being honest, full disclosure, I will trade Tesla and Amazon and all that on a Friday, but Monday through Thursday, I stick with what I like.
You don't want that $2,500, 0.4 delta Tesla contract on Tuesday.
No, I mean, no, it's just not my thing. But on a Friday, game on.
Tesla Cobras are.
It's fun, or it can be really not fun. But it's been pretty fun lately.
Yeah, I gotcha. Well, Mike trades Tesla all the time, so that'll be interesting. All right, so.
Do you, Mike? Is that a thing?
Tesla is one of my favorites. It's just, you can buy some contracts for whatever price, and within 15, 20 minutes, they can be up $800 each. And it's one of the few tickers that'll do that. You've got your Amazons, you've got your CMGs, you've got your Roku and Netflix. Like these high flyers, you've got to be careful with them because if it goes in the wrong direction, you're going to lose that much just as quick. But there's a few tickers out there where you can just make some really solid gains in a relatively short amount of time. And Tesla, out of all the crazy wild tickers, Tesla's probably my number one. And Roku would be number two, but that one, for some reason, I go on streaks where I can figure Roku out really well, and then I'll just completely lose it and get smacked around. So Roku kind of scares me more so than Tesla, surprisingly. But Roku is one of those tickers where you can, $500 or $600 contract, and you can make $500 or $600 profit on it within, an hour or so. It moves really well. But again, if it moves against you, it hurts just as much as it feels good when you make money. And I don't have, for whatever reason, I just don't have the consistency with Roku that I do with Tesla.
From Roku to Broku.
Broku. Well, sorry.
Oh no, it happens. It happened to me once, and then I was like, I'm gonna stay away from it and switch over to Netflix. And that worked out.
Netflix. I'm not a huge. I don't know. I don't have a great like you're just saying. Everybody's got their own thing. Like Netflix just takes a lot of money from me for some reason. I don't know why. I don't really trade it anymore, but I don't know. People love Netflix. People do great with Netflix. Netflix just takes my money. So I don't know. I got psyched out on Netflix. So I just stay away from it. It's probably stupid, but all right. So let's see. So yeah, go for it, Mike. What did they send us? What did they say? What are we looking at?
We're looking at Tesla, and the contract this was on March 24th, and we're looking at $950 puts. That was the weekly. And that was March 24th. It looks like it's going to be a Thursday. So the weekly basically expired the next day. So we're looking at 1 day to expiration, 950 puts. This green arrow down here is where the entry was.
Oh yeah, okay.
So Tesla had this big move down. This is where 950 puts were entered, and you can see that candle was basically the low of day, and this red candle over here was the exit. So these contracts basically went from $4, a little north of $4, $4.22 and $4.15, and the exit up here, they were just about $1. So a pretty decent drawdown on that particular trade. And there's a few things that just immediately stood out when I saw the chart. First, up here, high of day was 1,024, and this down here is 988. So basically, Tesla opened the day, went up north, hit a high point, and then kind of just went on a downward spiral here to the tune of $40 run. It was just a little bit less than that, but it was about a $40 downward move. And that's where the puts were entered. So for me, the first thing I notice is that it's probably a chase. Now, Tesla can go 40 bucks, kind of consolidate, and then go another 40 bucks. We've seen that time and time again. Tesla can move 100 bucks in a day on these crazy days. So just being down 40 bucks doesn't necessarily mean it's not going to drop further. But for me, when I look at this chart, it's basically, it started off the day up and then it just gave that back. This would be about where the orb 15 low was, and it gave, basically, it tried to hold that with this move here and gave out. And then it went down further with some momentum. So the first thing for me is that since it just went basically from high of day to low of day in a 40-point run, that's a chase. And then I put the 34 EMA on here because a lot of people in our group like that one. If you see down here, it's stretched pretty far from the 34 EMA. So if you hear Kang talk about Tesla, he talks about momentum being stretched. So for me, the 34 EMA is up here. The candles are way down here. And then you guys know I don't like indicators, but another popular one for the group is MACD. So if you look where this put entry was, if you look at the MACD, that was stretched way down here as well. So you've got a 40-point downward run, a stretch from the 34 EMA, the MACD is stretched. So this point here, I would basically look at this and say that was just a chase entry. And the exit, even if you did get in here, what I would like to see is a hold under the 34 here. So when it popped through and then came back below, I'd say, you know what, we're kind of safe right now. This was a support level here, which was the support level here. And then it broke back above the 34. So at the very least, I'd like to be out of the trade here. Yeah, sitting through this kind of chop throughout the day and then getting out up here is going to basically destroy those contracts because it expired the next day. And you can see the first entry was 422, the exit was 98. So through this climb and then this kind of consolidation, those contracts just eroded away. So the next one here, this basically sums it up for me. Entering a put position after a $40 move, the 34 EMA were stretched far from that, and the MACD is stretched as well. And my notes on here would be, you could exit after it broke through that 34, which is right about here. You see it pulled back a little bit, but then it went on to make a higher high. So for me, that would basically be where I'd want to exit that particular trade. And even that trade exit there, if you got out there, that's still going to cost you a little bit on these contracts because, again, it was already on such a big move there. Again, basically for me, this just comes down to, it looks like it was a chase of an entry from what I look at as far as how I would look at that chart and trade it personally.
Yeah, I see a couple things. If you go back to that previous one, I'm not sure that broker.
Let's get that back up there.
You got a new picture on the website. That's
I
nice.
did. I tried to be a little more personal.
That's nice. We know you're a robot though, so don't even try.
Yeah, I got the new the 7-star 2.0 bot in, and
7-star Michael is. Listen,
do not chase Tesla.
this is a massive position too. I mean, I don't know what.
This is a big position, yes.
That quantity is so many contracts. Like this is a very.
This is about a 200 contract trade. So
Wow.
200 contracts going from 422 to 99 it's a little bit of money in there. So now the person that sent this, I don't know their full trade history, but I'm pretty sure they have a decent account size where that.
Sure.
That's a good amount of money. It's going to hurt, but it's not going to destroy them and stop them from trading. They can still trade. They can still make recovery trades.
Well, that's good.
Definitely not something I would recommend for someone either enticed by those big moves of a Tesla type of ticker.
Yeah, right. That's like a.
How to trade before you start touching Tesla, because Tesla's kind of nicknamed the account killer, widowmaker. There's a lot of negatives to Tesla if you're not used to trading. Now, the person that traded this, like I said, I don't know their trade history, but I know that they can trade stuff like this. I've seen them post stuff like this before. So this isn't out of the ordinary for this person. It was just, for me, again, it's just summed up by, it was a chase entry from what I look at.
Yeah, I think that's solid for sure. You've got those three things you pointed out, and even like another exit even before the 34, like right there where they entered. Like if you think of that as maybe a double bottom, possibly on a very short-term time frame, once it kind of confirms through that neckline, I think I might have been out right there. And the only reason I brought up the quantity is just make sure everybody should always, whatever, it's relative. Like this is maybe an $80,000 position or something like that. And that's all relative. That may not be anything to this person, right? It may be a very absorbable loss if it came down to it. But just everybody should keep that in mind, only go into positions that you are very comfortable with as far as sizing. So you think it was proper sizing for this particular person's risk tolerance, as far as you can tell. Is that correct?
I don't know that for sure.
Okay.
In other words, like I know I've seen this person post some things that would lead me to believe that trading Tesla is fine, trading decent size is fine. I don't know if the dollar amount on this one was bigger than normal or average or whatnot.
Sure.
I can say, I don't know this person personally, and I don't know too much about them other than I've seen some posts here and there in the chat room, which makes me believe that trading Tesla is kind of a normal thing for them. And 200 contracts of Tesla, that's a pretty big trade, but like you said, everything's relative. So I can't say 200 contracts is big or small. I don't know how that compares to what they would normally trade.
That's right. Yeah, relativity is extremely important, but that's just, I always like to point that out. Whatever, anybody out there, be sure you're only trading stuff that is.
It really is. I like to focus on percentage, just because if you tell me you made a 60% trade, I don't care if it was one contract that cost you $80 or a million contracts that cost $17. 60% is 60%. Yeah. And especially with the small accounts now, we're doing that small account thing where someone sent me a message as I get a bunch of people racing by. Someone sent me a message and they were like, "Oh, dude, I felt like this was a pretty good trade, but it was only $40. And I looked at the contract they were in, it was like a dollar contract, and they made $40 on it. I'm like, dude, that's a 40% trade. You're focusing on $40. And yes, if you're a full-time trader and doing this for a living and you took a one contract position and made $40, you're going to struggle to pay your bills. But if you're doing this as a profession and you made a 40% gain, you're going to do all right. So you can't, I don't necessarily like focusing on the dollar amounts that people make on it, because again, speaking of relativity, if you made a $10,000 gain and post that on Twitter and everyone's like, "Oh, wow, 10 grand, I wish I had that." If it took you $1 million of buying power to make $10,000, that's not a great trade.
That's right.
The person who made $10,000 with a $100,000 account made a better trade than the person who made $10,000 with $1 million account. So just looking at the dollar amounts, it's cool for people on Twitter that are easily impressed, but that doesn't tell you if it's a good trade or not. Percentages will.
Yeah, no doubt. We're getting some comments where people are saying, Tesla is a killer and they've almost lost this amount and they've had some, serious issues with it. KJ, you trade it. I mean, have you had any bad experiences with Tesla or I'm just
Oh
looking
my God. Have I had bad experiences? Absolutely. I mean, in the beginning of trying to trade it, it was awful. And I was like, why am I putting myself through it?
Mhm.
But I was also doing something stupid and trading and looking at P&L at the same time and not letting the chart dictate if I should stay in or get out. So I just kind of swapped all that up, and I don't look at anything after I click buy. I'm looking at a chart, and then until the chart says to get out, then I'll get out then. But if I keep fixating looking at a number, it's going to affect how I think, and that's just me personally. So I don't look at that at all, because had I not back in the day starting to trade Tesla, like on a Friday, obviously, it would have probably worked out. But then I'm seeing, it's getting read by this amount or this or that. And then you get squirrely about it, and then you can start clenching more. And nobody likes to do that. So
yeah.
when the chart tells you to get out, then get out. So even looking at like the Tesla trade that Mike has up right there, after that potential like double bottom,
Yeah.
I would have gotten out there, and the 34 kind of curling up a little bit, like I would have been out so quick. Woo, so quick. But I want to protect what I have as well, because that also is a big thing. You got to protect your capital.
Yeah, that's a great point. Like also, Mike, I can't see all the timestamps, but like, did they go all in like 200 contracts at once, or did they scale in on the way down, or do you know?
So I don't have timestamps on here, but it looks like it came in as 100 lot and then some 50 lots.
Okay, gotcha. Yeah, I totally agree,
The
KJ.
dollar amounts are all about the same. So it's 422, 415, 422, 422. So it makes me believe they were kind of entered all, pretty much right about the same time, because if Tesla moves, those contracts are going to move quick. So the fact that they all filled pretty much at the same price leads me to believe that it was just kind of just a boom, boom, boom type entry.
Yeah, I agree totally with KJ. And also, we should point out, like we do every week, if you're live in a Tesla trade with hundreds of contracts, you're going to be thinking about certain things differently than some people like us who are like after the fact. You know what I mean? Just looking at a chart. So there's always that to acknowledge. But like the double bottom situation right here, the neckline's broken, the 34 is breached, and you look at the MACD, climbing back up. I mean, that does seem like a pretty robotic exit to me. That seems like a great chance to get out. But I totally understand when you're in the moment, it's difficult, or it is for me anyway, and a lot of people. I'm getting better at it, but it's difficult sometimes to think entirely rationally. And I'm pretty robotic about it. I'm pretty good about it until I get over a certain number of contracts. And then I get very emotional and I just have bad choices. So I wonder if this person had, say, 10 contracts, if there would be more a different exit. You know what I mean?
That's kind of a downside that I think of doing something like this, because everyone can look at a chart when you're like the whole day is done. You look at a chart and say, well, of course that's where you get in, and of course that's where you get out. And I kind of hate when people do that.
Right.
So that's part of what we're doing here, is just because it wasn't our trade to evaluate in the moment. So it's a second set of eyes, maybe coordinating and saying, okay, if you looked at this, this, and this, what you might not have in the heat of the moment. So there's always that, like anytime you post a chart after the fact on Twitter, everyone's like, well, yeah, of course you can see it now. So that's why I try to post things either in real time before the setup actually happens, so I can say, this is the setup I'm looking at. If it does this, I'm going to get in. So that way you can see that it's a real-time analysis. And then I like to post the chart that I'm looking at and the confirm to say, this is the entry I was looking at. And yes, I did take the trade based on that. So there's always, we can always look at this chart right here and say, yes, the double bottom, and yes, the MACD, and yes, this. When you're in the heat of the moment, it is a different mentality sometimes, because you have, this is my trade, this is my money, I don't see clearly. So that's what this is about, is again, to get those extra set of eyeballs to maybe point out something that this particular trader just wasn't focused on.
Yeah.
But
Right.
there's always going to be that someone says, well, after the fact, it's easy to say that. And I agree with that. But, you know, the only way we can get better is to look at the things we did and maybe try to spot something that we didn't see when we were in the trade. And then that becomes a new rule for us.
Yeah, and hopefully we can remember that next time. Like I really think the psychology is 90% of what we're facing. I mean, TA is not difficult to learn the basics. A lot of things about trading is not super difficult to learn. I really think what we're talking about here, the heat of the moment, the psychology that starts going crazy when it's real money and the candlesticks are real and live. That is the part of trading we have to constantly work on, in my opinion, is
Trading itself, if you break it down, is very easy concept. Taking the easy concept and making it actually work is where the breakdown occurs, right? I can show you how to draw a single line on a chart, and you can master that skill in, you know, one day of looking at 100 charts. You can figure that out. But when you're actually in the trade or looking at a setup and you draw that line, when it breaks that line, do you push the button? That's the part that's hard, right?
Yep.
I can point out how to do technical analysis very easily. And a lot of people watch that video I have on YouTube and they come back and they say, oh, it makes perfect sense. It's you broke it down pretty easily. I get the concept. And then they send me messages and they're 50-50. Some are like, oh, I understood the concepts. I made it work. Here's a trade confirmation. Thank you. And then the other half is, oh, it seems so easy in the video. I tried to do it in real life and I couldn't figure it out. Right. So there is, you know, you do have to practice and get better at it. But there is a point where when we're not in the trade, it's easy to evaluate stuff. And when you are in the trade, that's what makes trading hard, is the emotional aspect of, can you do the right things at the right time when you're actually live in the trade?
Yes, and I don't know, 20% of the time my answer is not really. You know, I do okay, but sometimes you know, I don't know. What about you, KJ? Are you robotic? What's your deal? You push the button?
I'm getting better at it. That was, I think, a problem for me when I first started was, of course, you get emotional, you know, it's your money and this and that, and you give yourself excuses and reasons and hopium and all that crap, but none of it's real. But when I actually set a plan out, chart things up the way it's supposed to, and here's a hard stop, this is what's going to happen, you know, and you don't give yourself a choice, it's kind of the best choice, because it's do or die. Either you buy it or you sell it, and if you don't, you miss the boat. So I'm getting better at completely being unemotional and not, when you don't care in a way, like emotionally, it makes it so much easier.
That's what
So
I think is the downside to paper trading, is that you don't
right.
mimic the live emotion. So my next
Mm-hmm.
question to you would be, do you trade the paper account differently than you would trade the same dollar
No,
amount but in a live account?
nope, never. Nope, because then it wouldn't be helpful. Because if I was going to only buy 5 contracts in my real account, but then I'd buy 500 in a paper trade account, then what's the point? I'm wasting my own time and I'm lying to myself, because I wouldn't do that in real life. I would panic buying 500 of them, but I wouldn't in a paper account, you know? It would be a waste of my own time.
Yeah, I totally agree. I'm awesome in paper trading accounts. If we ever have like a paper trading account challenge for a tank top, man, I'm going to have a tank top that I'm going to give away.
So the question then is, what's the breakdown between doing that and doing it live? And this, if we had an answer to that, we would all we'd be cajillionaires, right?
Well,
Right.
it's interesting because people who do totally algorithmic trading, or like I know traders who swear by OCO orders. They will only do OCO orders, right? That's all they do. They set when it's going to sell and when it's going to, and they still, you know, have like a 75% win rate. It still doesn't work all the time. So algorithmic trading, like fully, you know, institutional algorithmic trading, I've heard doesn't always work at a high thing. So there's something going on that human emotion doesn't help, but I don't think it totally explains it either. I think there's something mysterious going on for sure.
I think people forget as well that the market doesn't care what we do. Even if we've charted everything perfectly, it still doesn't care. And it can go against us. And that's why we have to be robotic. Otherwise, it's going to kill us every time.
It's just hard. Yeah, it's just hard to do. You know what I mean? I totally agree with you, by the way. I totally agree with you. But the idea that I don't know. We're not robotic, and we always, like you said, we always have to try to be more so, especially with exits. I think exits are the place, especially losing exits. Like keeping. Mike is great about keeping those losses small. He mentioned the 5% loss and 10% loss, and like, it's just that's the thing. That's the key. That's the thing we're all working on, and that's the thing that's always working against all of us as
It
retail traders. This
comes
is
with
really
experience though, because it's like anything. And I use various sports examples, but you're not going to be an expert in anything doing something 6 hours a day for a month, right? You can say, well, I stare at the markets from bell to bell all day. Well, great. How long have you been trading? 6 months. Okay. Like, what are you going to do for 6 months and have like all the discipline and skill that you need to be very good at something?
nothing.
It can happen. There's people out there that do it. It took me a lot longer than 6 months. It takes a lot of people a lot longer than 6 months. So it's one of those things where it's hard to get out of a losing trade because, one, you don't want to take the loss. Two, you don't want to admit you're wrong. But if you do that over and over and over and over and over and over, at some point you're like, this just doesn't work. I've got to cut trades that are going against me or I'm going to get killed.
Yeah.
And for me, it's one of those things where I had rules written out and then I break them periodically and I'd go, oh, that's why that was a rule. And I'd break it again and say, oh, wow, every time I break this rule, there's a really good chance I'm going to lose more money than I'm comfortable losing.
Yeah.
And it got to the point where I was doing things wrong so many times and I had so many rules to prevent against it that eventually I said, okay, from now on, if this condition exists, I am not breaking the rule. I don't care how much, like my finger can be twitching on the button. I'm not going to push it. This is a rule. It's a rule for a reason. I'm just not going to sell here. This is a rule. It's a rule for a reason. I'm going to sell here, right? And over time, I got rid of my stubbornness because every time I was stubborn and said, well, I just don't want to take a loss here. Well, guess what? I'd lose a lot more money than I should have.
Yeah.
So that I became mechanical because I just got so numb to losing money when I would break my rules. But you're not going to get that necessarily in 3 months, 6 months. So this is one of those things where it just takes time to repetitively see how wrong behavior hurts you, repetitively see how good behavior helps you. And then over the course of time, those things just become automatic. They're not rules that I have to think about. It's just like this trade here, right? We look at this and say double bottom, it breached this, it breached the 34, and MACD is coming up, out of the trade. That's it. It's not really a thought process. It's just boom, XYZ happened, I'm in the trade. XYZ happened, I'm out of the trade. And it has to get that way to be the most efficient trader, but it has to get that way with the right rules. But once you get that way, it's just, I still make mistakes I still break rules here and there. I'm not perfect. I'm pretty emotionless for the most part. But then I learned this week playing with the $500 account, I'm all over the place with that one. So I don't trade that the way I normally trade every other account. So there's this psychology factor to it that I can be so mechanical in every other account, and this one account with an amount of money that is insignificant to me, I'm freaking out over it. A $20 loss in that account, and I was like, oh my God, I can't do this. What am I, $20, I need that back. In my other account, if I lost $500, it'd be like, that sucks, but whatever. And this one, I'm losing $20 out of 500, and I'm like, oh my God, that was the worst trade I've ever done. Right, so there's a massive emotional aspect to it. And when I went to the $500 account, I reverted back to the first year trader Mike, where I was like, okay, do I want to get this trade? That's a good trade. Oh, I missed the setup. I was hesitant.
You're
right?
nervous.
I reverted back to first year Mike because that account mentally screwed with my mind, where it's a dollar amount that wouldn't, if I lose $20 in a trade, it doesn't impact my life in any way whatsoever. So it wasn't the $20. It was the fact that I was losing $20 out of a $500 account that I have no more buying power to recover that $20 and then some.
And there's something else too.
It's
you are up against KJ and Jenny as a team.
That was the real reason why I couldn't trade that account. The two of them just psyched me out. They basically got in my face and said, we're small account masters. You've got nothing on us. And from day one, I just freaked out.
And you know that women are better traders than men. They just are. You know,
much better.
And KJ, I know you have to go at 5, but you said something. I wonder, and hey, if this is like, if the answer is no, just say no. But you said that $500 challenge that Mike just brought up.
Mhm.
Said you learned stuff about yourself during the $500 challenge. Is that something we can talk about publicly, or is that just something we don't want to go down?
I didn't learn anything like super creepy and crazy. I wish I did.
Oh, well, never
Um,
mind. Never mind. If it's not
I
creepy.
wish I did.
Oh,
No,
what
but
did you learn? What did you learn?
honestly, that I am the most impatient person on this planet. I really have figured that out because if with $500 you can only do so much. Let's be real. And to sit there and wait and wait and wait, it was agonizing. But then after like the third day, I was like, you know what? It's actually not so bad because I would have done 95 stupid things, before I would have waited for this setup, and I wouldn't have had the buying power that I really wanted to do it. So just sitting there and waiting was the best thing ever. And I had a lot of fun with it. And I don't know. I mean, even though, it's only $500, it's small to a lot of people. It's doable. It's completely doable because I did it. And it's doable, to continue doing things like that next week after. Because if you aren't responsible with one contract that costs, X amount, how are you going to be responsible with 500 of them? How are you going to, manage a huge account? You can't if you can't respect what you have that's smaller. So not only, I guess, was it just the patience and, sitting there like a sniper, which is awesome, but it's a respect thing too. You need to respect what you have. Doesn't matter how much it is. It doesn't matter. $5, 500, 5 million. You still have to respect it or you're not going to have it later on.
That's an amazing point, because if in a bigger account, we might think, okay, I can go ahead and just be loose with this because I can just make it up with another trade. And like, if you're not good at managing trades, that's not going to be true necessarily. But there's that
Right.
illusion. The illusion of, plentiful buying power says I've always got a chance to make up these losses. And
You always have a chance to be deeper in the hole too,
right.
If you have 5 million and you lose $1 million that day, okay, yeah, whatever. Well, it is kind of whatever. But the next day you say whatever again, you're down to 3, 2. Well, it'll drain your account right in front of you, and then you'll be like, oh, what happened? You happened because you didn't respect what you had.
Yeah, that's right. You didn't learn.
No,
Yeah.
and they're gonna learn today.
And KJ also learned a lot because you saw a couch jumping video a long time ago by a famous trader.
I did. It was almost an Olympic sport, I feel.
Like, it was this couch. Tell us about the couch. I can't do it with a straight face. Mike, I need to know about the couch jumping video real quick.
2 words. I've got 2 words.
Uh-oh.
Actually 3. It's 3 words. This
You
whole
made-
thing can be summed up in 3 words.
You made me do this, by the way.
Double dog dare.
I mean, 2 words. Ripped pants.
Essentially, the quick story is I don't know how it even started. I was jumping over things. I was skateboarding in my living room, and somehow I said something about I could jump over a couch, just being a little cocky, not realizing my actual age and the fact that I haven't exercised in about 25 years. And somehow KJ double dog dared me to jump over a couch, put it on video, and I had to do it. In the process,
It
ripped my
was
pants.
amazing.
You ripped your pants, though. That's the best part.
He didn't
I'm gonna
notice he
get
ripped
over
it,
the couch. The pants can be replaced, but I'm gonna get over that damn couch.
but you didn't notice that you ripped your pants. It took me screenshotting it, zooming in, sending it to you to tell you you ripped your own pants jumping over your own couch.
My priority was jumping over the couch. The casualties that came with that were just whatever happened.
That's true, and you did it. I have to give it to you. You did it.
What sucks for you, for those of you that don't know, in May there's a conference in Las Vegas where a lot of us will be gathering, hanging out. And what sucks for KJ is I'm going to come up with the double dog dare to get her back.
Oh,
And
no.
what sucks for you is that I'll probably do it.
We'll do it.
I don't lose.
But see,
Hence
Mike,
the ripped
wait,
pants.
this is a problem because Mike is very competitive, and he has also told me that he doesn't lose. So
But I really don't lose, so game on.
you heard it here, folks. You've heard it here. There's going to be some kind of Mike and KJ showdown in Las Vegas coming up.
That's the best place for any kind of showdown, if I can say so.
Someone needs to bail us out.
There are some
Yeah, if you guys want to meet us, we're going to be in Las Vegas on May 13th and 14th. There's a FinTwit conference in Las Vegas, May 13th and 14th, and a lot of the Blackbox people will be out there. I get to meet some of them for the first time. I haven't met these guys face to face yet. I've worked with them side by side online for 6 years now. So May 13th and 14th, I don't think it's everyone, but some of the Blackbox crew will actually be out in Vegas. You guys can come hang out. Go to Twitter or just type in Google. You can just type in FinTwit conference or FinTwit Vegas, whatever. Some of those will come up, and I'll be there.
Yeah, that's going to be fun. And I'm so good looking in person. Like, it's hard to believe.
It's astonishing, actually.
I mean, she's telling the truth. It's not bragging. It's just it's just objectivity. You know, I'm just a cute guy, you know. And,
I feel like Phoebe from Friends, you know, my eyes, my eyes.
Yeah. It's, you know, but Mike has been, all right, let's quit being silly for a minute, because we've got a question here, but it is true. Your eyes will burn out and you'll be like, well, I've got to do some more martial arts to, you know, to get in better shape. So it's going to be good for your health, Mike, to meet me in person. I'm excited to, I'm so humble. I'm telling you, I'm also joking. All right, so here's a question for both of you. This is good. I think both of you will have ideas about this. What is a good account positions to take, speaking of smaller accounts, for accounts under 3K or so? This person is kind of new. They're still trying to get their process down. Like, if you had a $3,000 account, what would be a reasonable position, you know, options positions to open with 3K total account? What's your opinion on that, guys?
I mean, for me personally, like, a lot of people don't like ETFs. They find them super unattractive. I don't get why, because I'll scalp IWM and SPY all day long, and I love it. I mean, those two, like, everyone has their little sandbox and stuff, and that's awesome. Well, those two are in mine. IWM is actually really fun, and they're not expensive relatively, but when they move, they move. And SPY is just an old faithful. I love that one. When there's nothing else exciting, or, well, SPY's not being flat, those are my two go-to tickers, honestly.
Yeah, the contracts aren't that much either. That's what's great about SPY, for sure.
I mean, you can scalp one or two of them and still have a great return. You really can. I mean, and I say that because, I mean, I do it all day. We did it Thursday. We were scalping SPY in that $500 challenge room. We were doing it live, just, you know, hanging out and reading the chart. It's fun.
Yeah. The other thing I like about SPY is you can get same day expiration multiple times throughout the week. That's kind of a downside. If you're not good with same day expirations, that's actually going to hurt you. But with a $3,000 account, and a lot of people aren't going to like this, but I would say if you're taking $200 or $300 positions, you're fine. If you take a $300 position, the idea is you're not going to let it go to zero. So that would be 10% of your account in a single contract. Right. But I would not let that go to zero where I'm willing to risk the full 10% of the account. The other thing is, like someone said in the $500 account, they asked the same question, like, we have $500, what position size would you do? And I said, honestly, I would stick to things that are like $50. You know, with a $3,000 account, you don't want to put an $800 Tesla contract in it. You could double the account overnight, sure, but you just don't want to take on that risk. So for $3,000, I'd say I'd be comfortable, and it depends on experience as well, but I'd be comfortable putting in a $250 or $300 contract in there, and you have a little bit of room for it to move around. Again, now having said that, I was putting $250 contracts in the $500 account, which is 50% of the account. So that's aggressive, that's risky, but the smaller the account, I feel like the more percentage of it each position is going to end up being. But SPY is a great one just because you can get some relatively cheap contracts 3 days a week, because it's same day expiration Monday, Wednesday, and Friday.
So it sounds like you like to, when someone is new especially, you like to have them not risk more than 10% in any one trade, definitely.
10% is that's super aggressive. Like you're going to hear 1 to 2% position sizes for the most part. But if you have a $500 account, 1%, you're not going to find a contract for that.
Yeah,
right?
sure.
It's just, it doesn't make sense. Well, I mean, you could, but it's going to be so agonizingly slow. With a $3,000 account, let's say you open a $250 SPY contract. I mean, you can make 80 bucks off of that. And that's, if you do that repetitively, you're going to grow that 3,000 to the point where you can get more expensive contracts. Yeah. And if you're in a $250 contract and maybe it goes against you by 50 bucks, 60 bucks, you can't judge it just based on the dollar amount, but I'd look for where support is or resistance in that area and just say, hey, you know what, I'm willing to lose another, 10, 15 bucks or whatever, and then I've got to cut this. So this is the support area I'm looking for. You're not going to take a $300 contract and run it to the ground. So even if you lost 100 bucks out of that, out of a $3,000 account, 100 bucks really isn't going to hurt you that much. If you took the $300 contract and let it go to zero, then you're getting to the point where it's like, okay, that did a little bit of damage. I can't do that, 2 or 3 more times.
Yeah.
It depends on your risk tolerance for the most part, but 3,000 bucks, I would put a $200 or $300 contract in there and not let it go down more than 100 bucks or so. So you really have to dial in the entry, find out how much room you have to the next support resistance where that would make sense to do so and it wouldn't be too risky.
Yeah, right. Yeah, that's solid advice. And let me jump in here too, KJ. I know you got to go, but we do have a listener here asking, would you quickly kind of expand on like how do you scalp SPY? Do you have like do you have a minute or two to kind of?
Yeah. I mean, lately I've been using the 30-minute a lot to get the overall idea of what's happening, what it's doing, how it's moving, and then going from there down to the 13. From the 13, dialing it in, it depends on what you want to do. It's like a loaded question. If you're scalping or you're day trading, or, I mean, I was getting so nitpicky on Friday, scalping 3-4 candles because things were just not really moving like I wanted them. The range wasn't really there. But I start with the 30 and then I dialed down because in this environment and how crazy the market is, I'm not swinging anything. I'm 100% cash every night. I don't trust the market right now. Clearly I have trust issues. So I like to lock it in and sleep at night because I don't want to hope to God, it doesn't gap down in the morning or gap up or whatever. But I start with the 30 and then bring it down in time frame depending on what I want to do that day. So it's a kind of a loaded question, but I look for patterns. I kind of go straight into patterns because the flow on ETFs is messy and there's a lot of it, and I don't look at it when I'm doing that. But if there's a really amazing flow trade, then I'm buying the same contracts, same everything that they're buying until I see them get out.
Yeah, sure. 13, I've seen a couple people using the 13. Like, do you day trade off the 13 or is that more of just a charting thing? Or
I always have the intention of, oh, it's going to be a day trade. It's going to be great. And then I'll want to lock it in because, again, with the market and news and depending on who's talking or if it's a Fed speaker or if the president wants to do something or not show up or whatever he does, I like to lock it in because would you walk past it on the street? You wouldn't. You would put it in your pocket and keep walking. You would. So I'll lock it in, look for something new. That trade is over.
Yeah, Mike knows what's up with me. I mean, I'm up. I get up 8-9% on something, and I'm probably taking it. That's just how it is.
But there's nothing wrong with locking it in. I mean, there's not, and people are like wanting all these home runs and this and that. Well, if you can't hit first and second base, how are you going to hit a home run?
Yeah, right. I totally agree.
Yeah, while it's choppy out there, scalping's been really fun. So I've just been doing that. Starting with the 30, getting the overall feel, going down to a 13 if you're going to day trade. For me, I'm scalping off a 3 and then down to a 1.
Yeah.
I like the 3, though. Love the 3. Love it with high Ganache candles. Love it. But something else I do as well is I change my candle colors and my volume candles because volume candles are liars. People think they see, oh, the volume is red. Well,
Oh,
So
yes.
the last recorded transaction on that, I changed them all to a single color. I just want to see how much is in there in volume.
Yes. Yes. I said that weeks ago, and some people jumped on me. Like, I totally agree with you. I like the monochromatic volume candles. I
Hmm.
agree.
Absolutely. And everyone has red and green candles. Mine are not. Mine are blue and pink. Not because I like blue and pink, but because I don't care about those colors. I just don't. It doesn't trigger. It's not like a trigger, like, oh, it's a red candle, holy crap, or oh, it's green, oh my god. They
Yeah.
don't. Color candles don't matter anymore.
Yeah. A lot of people are using blue and white. I've seen that quite a bit
I
because
like that. It's
with their
cool.
price action candles, because the idea is, red and green have this, especially red has this, like, psychological programming to it. And I don't know, a lot of people are reporting, I've heard recently several people reporting success by getting away from the typical red and green color.
Hmm.
Um, yeah, I like that.
It's too Christmassy too. I hate that. I mean, I love Christmas and all, love it, but I don't need to see red and green all the time.
Look on the screen right now.
I don't know, red and green. I see it.
Mike loves Christmas. Like, everything's red and green.
His season.
We're programmed as market participants for red and green.
And
Like,
that's why.
those font colors, like there's the MACD, that's red and green. So you've got blue and pink. Like, I just use gray volume bars. I don't want to know, the buying and selling is in the candle itself, the price candle, right? So the volume bars I like to have just monochromatic. And I don't know, I put like 2 indicators on, and Mike yells at me for having a cluttered up chart. So,
So
oh,
let me clarify that. If it works for you,
yeah.
I'm not against indicators. I'm against them for myself. I don't like them personally. But if it works for you, use whatever indicators work. It's just when I see someone that's new to trading and they have 15 indicators on their chart and they say, well, I never know when to enter. It's, well, yeah, well, 6 indicators say good, 6 say bad, 3 are neutral. It's like, just find 1 or 2 that you like and really learn why they do what they do and how to, process that data. I just don't personally like them, but it's also because my brain can't handle a lot of complex data. So I just don't like a lot of stuff on my chart that I have to watch and focus on and try to process 4 things at once.
Mm-hmm.
And the thing with the same color volume candles, you're not necessarily looking for, is the candle red or green? You're looking for, is the volume of the candle greater or less relative to what's been happening prior to that point in time. So the color doesn't matter. Are we higher volume or lower volume than previous? And if we're higher, great. If we're lower, great. You can process that. The color doesn't necessarily matter. You're basically looking for volume relative to prior volume. So in a consolidation, is volume at one level, and then in a breakout, do you get increased volume with the breakout? That's basically the information you're after. So the color of the candles, a lot of people will argue the color just doesn't matter.
Yeah, I'm in that camp. I think I heard Mel Stone say the same thing at one time, but I don't know. So KJ, you have a previous engagement. I'm really pumped that you joined us today to just kind of chat and talk about Mike's underwear,
Or lack thereof.
I really appreciate it. I wish that would have been even better. Is that video still available, Mike? Is that still around? So people in the chat are wanting to.
It's probably on Twitter still.
Have no fear, I will find it.
I don't delete stuff from Twitter, so it's on there somewhere. You probably just have to scroll back 1.5 years, and I post a lot. But if you're willing to scroll back 1.5 years, it's on there somewhere.
Yeah, you need to tell us how Twitter. Remember that, like how many tweets you've sent. Twitter tells you at the beginning. Yeah, that would be interesting to see your total tweet count. But nonetheless, like I said, KJ, I appreciate it.
It's worth finding. I'll tell you that. It's worth finding.
I want to see it, and like I've heard a lot. I've heard it makes you a better trader. Really, it makes you less emotional, and it makes you a much better trader. So I need to see that.
You can jump over a couch. Is a green or red candle ever going to scare you? No, come on. Of course it makes you a better trader. I suggest everyone jump over their couch today after they've checked their insurance is up to date.
Nothing on this podcast should be considered advice or guidance in life.
Nobody is a trained doctor or licensed professional.
True. No one has any right on this podcast to say anything, really. So we're glad that we're able to. But KJ, I can't wait till our Riverside Chats episode. We'll line that up and get that worked out soon. appreciate that you joined us today. What do you got? Wisdom. We need some wisdom. Leave us with some wisdom. What do you got for us?
Good God, nothing like putting me on the spot.
Right on.
I mean, the biggest thing, honestly, for me is for people just to respect what they have in their accounts. I mean, I get it. You know, you're not trading with money that you're paying the bills with, but at the end of the day, it's still money that you worked for. Unless you were just born secretly rich or whatever, but then whatever, screw them. But like, you know, if you worked hard for it, and you should respect it and treat your account like that. And you want to live to trade another day, you know, don't YOLO and think something's going to work out and just hope for the best, because I'm tell you right now, it doesn't work. If there's anything stupid people have done trading, I can tell you I have probably done it 10 times. So I've done it for you guys. You don't need to do it. But just respect what you have. And I will tell you, little gains do add up, because that's what I'm just doing right now, just to do it. And it makes you feel a lot better about the process and that it works, you know?
Yeah, right on. That's awesome. You know, we often talked about, I don't like the term house money. You know, I don't like, that's your money. You know, you can push the button, and the money's in your account, and you can withdraw it, and you can use it in your real life. So that's amazing. So people should just realize that, don't treat your account like it's play money, even if it is, you know, it's real money. Yeah, you can't go wrong with that. That took me a while to get in that mindset, because just doing it part time, I kind of had this idea, well, this is just play money. So, you know, I just wasted a lot in the early days because I didn't take it seriously, and it was stupid, because it's
Even if it's play money though, wouldn't you rather play with more money?
Yeah, that would be nice.
Exactly.
Yeah, give me more.
Exactly.
Yeah. Well, I love it. I love it. Yeah, I hope you have a great dinner. You guys going to a nice
Thanks.
place?
I'm not really sure what we're doing. Yeah, we're just gonna go have dinner with some family and do that kind of thing, because everybody, you know, during the week it's hard to get together with everybody. So we're gonna do that tonight, and yeah, just kind of hang out this weekend. Well, that's a lie. I think we're gonna do more drywall and all of that tomorrow. But nothing like a little HGTV, right?
The joys of home ownership, right there.
I know. Where's Chip and Joanna Gaines when I need them?
They're retired somewhere as frauds.
Probably. Still,
Fraud.
they can come fix my house though if they want.
Yeah, they're great at that, but I don't trust them, man. There's something weird about that. They
are odd. They're very odd.
Chip is too nice. I don't trust him at all.
No. You remember when they stormed the Capitol or whatever and stole that podium? The guy stealing the podium looks like Chip Gaines.
That was Chip Gaines. People don't understand.
There's a meme going around of that. It's actually hilarious.
I have to check that out. Chip Gaines stormed the Capitol, and
it's funny.
Well, that's what I'm saying. See, Mike, won't this be when she comes on Riverside Chats and we talk about stuff, where whatever she brings up, and we talk about it for like 3 hours? Won't it be a disastrous, dangerous episode? Won't that be amazing?
It's going to be a beautiful mess. I love it.
Those are the ones I like.
A beautiful mess.
Yeah,
anything goes.
People thought Hell's Bells episode was wild. Let me tell you, this KJ's episode is going to be great. Can't wait.
No pressure, right? No pressure.
Right, no pressure, none at all.
Now everybody will have to come hang out, bring a drink. You know, it'll be a nice evening, nice evening with the adults.
And Mike can raise his hand, and we can unmute him, and we can bring Mike in for a follow-up discussion on. Oh man, I forgot the name of the song. His favorite song.
I heard that he likes Chandelier lately.
Oh, you like that song, do you, Mike?
He's a big fan. Big fan of Sia.
He hung up. He has no interest in this conversation anymore. Mike, do you like Sia?
She's got some bangers in there. You can't be mad at her.
Can't hate her. Can't hate her.
All right. Well, hey, definitely hang out as long as you want to. You can take off whenever. We don't want to keep you, but
no, I do need to go and get myself together. But thank you guys for having me on here. I know I probably wasn't a lot of help, but hey, I'm here for the party.
Well, the party was great, and we need to do it again. Have a great dinner, and yeah, we'll definitely can't wait to talk to you more.
Awesome. Thank you guys.
Want to hear more of KJ? I'm going to coerce her into being on voice chat this week in the $500 small challenge room.
Yes. Yes.
And when I say coerce her, that's basically me texting her saying, hey, jump on voice. And then she's texting me a million times after saying, I thought you were going to be there too.
I did that 3 times this week. You never showed up. So
This
that's
week,
fine.
we are going to do voice chat in the small account room. It won't be the entire day and it won't be 5 days out of the week, but we're going
It'll
to
be
have
fun.
a designated point where KJ and I are going to yap throughout the day about the SPY chart that we're looking at and whatever trade we're potentially setting up for. Kind of designed for the small account, so it won't be Tesla that we're talking about, but
So what he's saying is he's just going to get on voice to yell at me.
I can get on voice and just yell. That's what people are kind of expecting from me. That can happen. But we will at some point this week jump into the small account room on voice chat. You'll have to listen or keep your eyes out for the add everyone tag. We'll tell you where the voice chat will be. But KJ will be there, even if I'm not. She will be on voice.
I'll do it. Hey, I always show up. Mike, do you show up? Come on now.
Yeah.
Come on. I did it 3 days this week and you did not show up.
She does not lie.
You have been on voice quite a bit, it seems like. I don't go to Discord a lot, but I will, you being KJ, it seems like I've heard you on voice with Kang and people. Is that kind of becoming more regular, or was that just now and then?
No, that was just kind of like a little one-off. I think Mel had something to do that day. She had an engagement that day, and I just jumped in just to call out some dark pool and things. Just so people don't miss that, because I know there's a lot of people that work and listen to voice and things like that. So I didn't want those to not get called out if there was something crazy going on.
Yeah, sure. Yeah, you're great at it.
Yeah.
I mean, everybody's great at voice who does voice, but yeah, definitely.
It's fun for sure.
All right, so she's going to dinner, Mike, and then we have to talk about her after she leaves. So
that's fine. You guys can talk all the crap you want.
that'll be all.
Fine. It'll be recorded.
Needed, KJ, you're one of my favorites. I say that about a lot of people, but the reason I say that about a lot of people is because the people I don't talk to, I just don't like them. So if we're talking to you, assume I like you.
Kind of the same, yeah. If I don't like somebody, I don't talk to them. It's just easier, out of sight, out of mind.
But what did you just say about everyone we haven't invited to the show, Mike?
No, listen, there's a list of people I would love to have on here.
Yeah.
That doesn't mean I don't like everyone. It just means we haven't had them on yet.
Kang can't come on the show.
But KJ is definitely one of my favorites. She can put up with my sarcasm and she can dish it right back. She's a good trader. She's got solid information in her head. She's definitely on my list of favorites for sure.
Well, I appreciate that. It's the nicest thing you've ever said to me in my life.
Oh.
So thank God it's recorded, because I'll have to listen to that a few times.
Yeah, this is all recorded.
Make that your ringtone.
I'm gonna make it my voicemail. Mike says I'm nice, I swear.
Am I higher on your list of favorites than KJ?
By default, you have to be.
Talking to you guys this week. We'll see you next week for what went wrong.
I'm going to dinner. You two hash it out, and I will see you everyone on Monday.
See you then. Thanks a lot for coming. Have a great night.
Anytime. Thanks, guys.
All right, Mike. So she's awesome, isn't she?
She is. She's been with us, I don't know how long, but she's one of the newer mods. We added maybe 5 or 6 mods in the last 6 months or so. She was one of the first of the new batch. Yeah. But she knows what's going on. She knows how to look at the system and knows how to put that data to use. I was texting or DMing her on Discord throughout the $500 challenge a little bit. So she's got really good insight on what she's looking at. And she's just not on voice enough where people really understands a lot of how she trades or whatnot, but she's a solid individual. I really do like KJ all around, from just personality to trading to everything. She's solid. And like I said, we are really going to get on voice this week for the small accounts, and we're going to hash out what we're looking at live in real time, maybe putting out some trades that people can get into for the smaller accounts. So that'll be fun. We'll get to kind of hang out and shoot the shit with her this week. Hopefully at least 2 or 3 days.
Yeah, that will be great. Yeah, unless you've got some other idea, I'd like to spend the last couple minutes maybe talking about how you think that went. But first, we've still got people here. I'd just like to let you guys know, thank you very much for coming to our mad carnival of discussing losses today. I really appreciate you guys coming. And we do this every other week. I just wanted to point out the handouts that's attached to this webinar. That's got information on how you can contact us and specifically how you can submit a trade. That Tesla trade that we talked about for this episode, that could be one of your trades. We hope you guys will send us trades and we'll be able to just discuss them as real life trades that happened out in the wild, and we're just able to kind of look at them and discuss them. So see that handout for the information for sure if you'd be willing to submit a trade. It's all anonymous if you'd like it to be. There's no, we're not going to say your name or anything like that. But just be aware of that for sure. This show, the heart of it really, it's not just us, trying to be entertaining and killing a few hours on a Saturday. The heart of it is discussing these losing trades and analyzing user submitted trades. So I hope you guys will consider to submit those to us for future shows. And I really appreciate you guys coming, as does everyone here at the show. But what do you think, Mike? Is that 500? A lot of people participated in the 500 challenge. It looked like to me anyway. I didn't participate, but it looks like, was there a good turnout? Do you think it was a good?
We probably had about 30, a little over 30 people.
Yeah, that's pretty good.
It was a choppy week though. It was tough. I know there's a lot of people that finished below the 500 that we started with. So it wasn't an easy week. There was a lot of chop going on. There was a lot of trades that you could enter and the momentum just wasn't there. So it reversed on you really quick. So we did kind of take a lot away from it. So I used to start every month with a $500 account and I would do really well with it. And then as my accounts grew, I kind of got away from doing that at the start of the month. And I went back to it this time around and realized I'm just not good with a $500 account. So the thing is, the difference is I was treating it a little more differently because I knew I only had 1 or 2 trades I could put in there because I was doing the $200 or $300 contracts. I wasn't looking for the $50 contracts. So I would treat it differently than I would on my other account. And then if I took a loss in that account, I would go to my other account and trade a contract that could have gone in the 500 if I had the buying power to do so. And that trade would have recovered the loss and then made a profit as well. But in the $500 account, there was no buying power to put that trade in it. So I put it in another account because I like the trade setup and whatnot. So the main difference on that is just, it really did it messed with my mind a little bit because I was more focused on, I can't place a losing trade rather than my focus on, am I doing the right trade? I was more focused on not messing up than focused on, this is the right thing to do for this particular chart. Because if I messed up in my regular account, I can just make 6, 7, 8 more trades. And by the end of the day, I'm going to be, green. In the $500 account, I make a losing trade and that's it. Yeah, I might not have the buying power for the contract that's going to recover that. I might have to buy something less. So let's say I took a $50 loss and the next trade I make a $12 gain and I'm out of buying power. You're at a loss for the day. So you don't have, the space to really play with that account. And that's what kind of changed my mindset about it. So I used to be able to successfully trade $500. I used to start every month doing so. It would put me in the right mindset of make sure if you touch that button, that's the trade you want to take. Yeah. And I got away from doing that a long time. I haven't done that, I haven't started the month with $500, consistently in years. And now going back to it, I realize it's just a different game now because the freedom of knowing I can trade however I want to is how I normally trade and I'm comfortable. Restricting myself is what really just messed me up.
That's a good seg into this question that just came in. But first, I think that's a cool thing we stumbled on today, which I've never really thought about specifically, but the allure and maybe even the false security that large amounts of buying power provides. That's a really interesting thing to me. I'm not saying that's a new thing to trading or anything like that. I'm sure people have written books about it, but that's something I've never really thought about specifically and how that might change things beyond just the regular, of course, I only have a certain amount of money, but still the idea.
So I'd say it's a double-edged sword.
Yes.
And the reason for that is I get a bunch of people that they'll send me a DM and they say, hey, I'm new to trading. I've only been trading for a month. I'm kind of, I like it and I want to make sure I learn the right way. I want some help, etc. and I'll say, okay, what are your goals? What are your this? What is that? Whatever. And a lot of them will say, hey, so I'm starting out with 80,000, or I've got 35,000, or whatever the number is. And my first thing is always remove most of that, right? So if you have more buying power, it doesn't mean you're going to make more money. If you're just starting out, it means you're going to lose money faster. You're going to lose more money and you're going to lose it faster. So having extra buying power doesn't mean success. It means you have more risk of losing that. So I would actually suggest people don't start with, $50,000 if you're brand new to trading.
Yeah, right.
The flip side to it, the good side, is that if you make a losing trade, you have buying power to recover. So
yeah, that's true.
There's two ways to look at it depending on your experience level. I'd say for newer traders, the increased buying power is bad because, one, you can just trade all day long, which leads to over trading. It might not be the right trade, but you have the power to do it, so you do it. So over trading is a thing. Revenge trading is a thing. These are all things that new traders go through that after 3, 4, 5 years of trading, you don't really do that much. So having the buying power at that point doesn't mean I have buying power, so I'm going to trade. It means I have buying power, so if the right setup comes along, I can take advantage of it.
That's right. We talked about earlier. That's what I do. I've got like a ridiculous amount in my cash account that I'd have no intention of ever fully deploying. Right?
There isn't a day that goes by where I use the buying power available to me. It's just I'm not going to get out of control and do something like that. So it's there and it's available, but I have the discipline at this point to not say I've got X amount of dollars, I'm going to trade X amount of dollars.
Yeah, like me, I've only been trading a little over 2 years, and like 2 years ago, I would often use all my buying power because I would just sit there and just chase chop up, and it wouldn't work out. So then I would just get into puts like immediately and just chase it down and then chase it up. It was just ridiculous. It just threw money away right and left. And like, you're right. That's a great point. I think that buying power is a there's a lot of levels to that subject. I really like it. One quick question, and then there's a great one we can end with. But one quick question: is the $500 challenge happening again this week, or was it just this past week, Mike?
So it was the past week where we were going to give out some Blackbox logo T-shirts for the winners. What we're going to do this week. So what we did last week was I randomly paired 2 people to form a team, and the Friday balance for both people were added together, and that was the team score. So that's what we did last week. This week, what we're going to do is there's no teams. Everyone has whatever dollar amount they have. Like some people have 300, some people have 700. And I was telling both of those groups, not for this week, because if you're paired with someone that has 500 and you only have 300, you're starting at a disadvantage. If someone has 700, you're starting at an advantage. So it had to be as close to 500 as possible. What we're going to do this week is there's no teams. We're not against each other. We're going to be in the chat room talking through some small account type of trades, but all trying to, we don't all have to take the same trade, but we're all going to trade a small accounts kind of as a group. And again, it doesn't mean you have to take what we're talking about, but we're not, like last week, we didn't share the trades we were taking because it was a competition. This week, we're going to talk about, okay, I see SPY bouncing off this level here. If we break above this, I'm going to enter calls or whatever. So we're going to do that this week more as a group versus as a challenge, which was last week.
Yeah, who won, by the way? What team won? Is that public?
I'm still getting information from some, so I need the account balance from the individual team members to add together for the team score, and I don't have all of that yet. So I don't have the conclusion as to who won just yet. Hopefully people still send the balances over this weekend before Monday. If they don't by Monday, they'll just be, canceled out of the contest because I don't want them trading Monday and then saying my account's $1,000.
And it was not you who won. That's correct, right?
I can
your team, your poor team member.
I actually did worse than my team member. So if we have a chance of winning, it's because my team member kicked ass.
Nice. All right. So here's a great question. Someone came in maybe about, hope they're still here, maybe about 10 minutes ago. I think this is great. This is kind of a retroactive question. It's also kind of looking toward the future question. And this person asks, they know we've both been trading the markets for a few years. Here's the question. What is our opinion of the last 5 months or so, specifically for a new trader? Is this an easy time to learn? Is this a hard time to learn? Mike will have much more information about this than I do, but in my opinion, very quickly, I think specifically from the beginning of this year, this has been a very hard time to be a new trader. This is a difficult market to learn in over the last 3 or 4 months is what I think is a clear answer. Yes, it's been a tough time to learn in. It's just been a tough time to trade. This has been a couple months of really difficult market conditions. What would you say, Mike? What would you add to that?
The market really turned in November. So if you started trading anytime from November to now, you're seeing choppy conditions, which normally, and I guess there's no real normal in the stock market, but there's trends. And right now we don't have those trends other than a sideways trend or up for 2 days, down for 2 days, up for 1 day, down 3, up 9. There's no consistency of buy something now and by the end of the week sell it and you make money. Prior to November, you could pretty much buy a bunch of stuff and sell it at the end of the week and make money. So the skill level required to make money was less. Now, if you're learning how to trade now, it's very frustrating because you don't understand like how things can be up 1 second and down the next. So it's a very tough environment to learn. If you're successful in this environment, once we get a trending market, I think you'll have a much easier time making money. The only downside, and this is more for me, I don't know if it holds true for everyone, but the downside to this is if you're learning how to trade now, your reaction is get in a trade, it makes money, get out of the trade. So once we have a trending market, you have to force yourself to stay in the trade because it's not erratically bouncing up and down. Whereas right now you're conditioned, get in, oh, I see profit, here's resistance level, I'm gonna take it. In a trending market, you can basically reject at a resistance and stay in the trade a little bit, depending on the length of the contracts, of course, because it might just break through that resistance and then keep running again. Whereas right now, the slightest sign of resistance, and I'm closing trades. I've got a quick trigger finger. If I see any resistance level and it rejects a little bit off that level, I'm just closing the trade. Whereas in a trending market, that might not be a shorter term resistance that I would even look at. I would have a longer term resistance to allow that trade to play out more.
That's a great point. If you learn this way and this is all you know, like back in September in the room, we would take, top tier flow that you and Charlie would call out. And I mean, we would hold on to it. We would buy, 4 months out, and often members would hold on to it sometimes to like 40, 45, 50% down. And then it would just work out. And like, if that's a completely different thing from the last couple months. So that's
that's the stuff that if you're down 40% now, it might not come back.
That's right.
Prior to November, if you were down 40%, I wouldn't even have looked at the position.
That's right.
It just wouldn't have phased me. I'd say, well, we're in the right flow. It's down 40%. So what? In 3 months from now, maybe it's up 40 or 80 or 100 or whatever. Now, if I'm down 40%, I'm going, oh crap, this looks like a bad trade.
Yeah, I don't think I'd let it get down 40. And just to be clear too, we're talking flow trading when we were following top tier flow, because options trading, a lot of the idea of letting an options trade get 45% down to a lot of people doesn't make sense, So we were talking.
Yeah, the technical trades I'm taking, I won't let them get that low.
Yeah, that's right.
If it's down 40%, you had a bad entry. Now for flow trading, you could say the same thing, right? Well, it's down 40%, they had a bad entry. But we don't know their whole thesis as to why they got in when they did. If I'm looking at a chart saying if it breaks $106, I'm going to get into the trade. If it breaks below 106, I shouldn't be in that far from 106, where if it breaks below and invalidates my entry, I'm going to be down 40%. Right? If I'm down 40% when it breaks that 106 level, that means I got in at like 110 or 111 or whatever, where it had to go so far down to get 40% that I was chasing the entry. With flow, it doesn't matter because, again, we don't know their thesis. So they're not basing their entry on a chart. They probably have someone looking at a chart, but their thesis isn't just, oh, it's breaking a resistance, we're going to take a 6-month position on this particular name. That's not what they're doing. So if that position is down 40%, it's for other reasons that we don't know why they got in, that they're not stressed over that. Whereas if I'm looking at a technical entry and I'm down 40%, I should have cut that a long time ago.
Yeah, right. And back in the day, I mean, remember that American Express flow in the fall that was down and then it just went crazy and came back? Like it was down like 40-50% and it came back and profited like a lot. And it'll be interesting to see if when we get back to that. I mean, I know we had the Twitter thing, sure, we had that going on last week, which I'm like the only person I think in the black box community who did not take the Twitter 43 calls. You took that, didn't you, Mike?
I took that one and
Smart.
actually
Smart.
sold it after the gap up, so I did very well with that one.
Nice. I didn't even take it. But it'll be great when we get back to that point with flow trading. But like, Bear's not done yet, so it's going to be a minute, in my opinion. I don't know.
We'll see when it's over. Because what's going to happen is we're going to see them start hitting a contract with 4, 5, 6 months of time for 800,000, and then follow that up with 1.2 million, and then follow that up, and then we're going to see another name do the same thing, and then we're going to see another name, and we're going to go, okay, now they're putting money to work, right?
Sure.
So it's quiet now. You're going to see the shift where one day you get 4 or 5 alerts from the app that says this is top tier flow, and you go, whoa, 4 in a day, we haven't seen that in a while. Yeah. And then maybe the next day there's 1, the next day there's 3, and you go, oh wow, this is really starting to pick up. So we're going to know not when the bottom is in, but when the big money assumes that there's enough, the risk is removed enough and the profit potential is there enough to put that money to work. Doesn't mean the bottom's in. It means they're comfortable putting that money into the market to see. Yeah, and we're going to notice that when it's going to come in. We don't know when, but we're watching the flow. We're ready for it. We saw it after COVID hit. The market dropped significantly, and then all of a sudden we just saw boom, 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 like flow play after flow play in some sectors that shouldn't have seen flow. And then sure enough, that was the bottom. Shortly thereafter, that was the bottom of the COVID lows. And we're going through that now. We're in a choppy market, so it makes sense that they're not going to be putting on these $4 million positions.
Yeah, I saw a couple people were like saying, the Twitter flow is like, it's proving that we're coming out of this bear, territory. And like, I really disagree with that. Like,
I wouldn't say that with Twitter. Twitter was a different example. So Twitter did what it did because of a headline.
I think Twitter, I think that was just insider people. I think that was just
someone knew that Elon took a sizable position, and they knew that before that information came out. They positioned themselves in the options market. The news that Elon has a sizable position came to public interest. And then once the public knew about it, of course, the underlying is going to go skyrocketing and gap up. I think it gapped up $6 or $8 that day.
Yeah, and that's just
so the person who bought that flow knew that headline or that information was going to be publicly available and positioned themselves in the options market before it became available. All we did was follow them into it, not knowing why. Then the headline comes out and we go, oh, that's why they loaded up on Twitter calls.
Somebody knew. But that's a one-off thing, though. That doesn't mean anything about the broader state of flow.
That's nothing to do with the market. That was specifically someone knew something about Twitter and decided to load up on the options. And then once the news came out, they didn't let up on it. So we saw some follow-up on Twitter. And again, that's not the market turning where people are comfortable taking on risk. That's a specific ticker for a specific reason. People think, well, with Elon's involvement, it's going to go up from here. So they kept piling into Twitter. That's not the market. That's a specific circumstance with a specific ticker.
That's correct. And there's people who disagree. And hey, here's a great question too. Do we think Roe will affect options prices with the Fed interest hikes? And would that impact us intraday during short-term day trades? Well, I think it's likely to, right? Because Roe measures the sensitivity to the interest rate. But that second part, will it affect the way I do intraday trading? For me personally, no, because I do it on such a short-term, basis. I do it on a 1-minute chart, scalping usually for 10 minutes or so. So just because of those specific kind of short-term things I'm recently doing, I'm not worried about Roe. But it could definitely affect options prices because it does measure sensitivity to interest rate. But do you care at all about Roe, Mike? Does that
Nope.
Yeah, you don't care at all. But any group.
Don't even, I couldn't tell you what it is, what it was, what it will be. No idea. It's just not a factor.
It's not on your radar.
So I trade very simply. I don't care about there's a lot of things I just don't care about.
Yeah.
And people are like, so what do you think? This headline came out, and someone in the chat room today, I did the Q&A on the weekend. Someone said, well, what do you think about CPI numbers? And I go, honestly, I don't even pay attention to them. I couldn't tell you what CPI is.
You're just looking at price
I
action.
can hear that it beat expectations or this and that, but what the actual number is the last time they put the number out, I have no idea. I just don't pay attention to that. I'm literally I have my method of trading. I'm a very simple trader. I don't care about the news. I don't care about headlines. I don't care about anything. I'm just watching my charts. I'm plotting my support and resistance, and I'm reacting to how price action reacts on these levels that I'm looking at. And you can say, well, a headline comes out, it's going to move the ticker up. Yes, of course, or move it down, whatever. But I'm going to also see it in the chart. And then I can go, why is something moving? And someone can say, well, a headline came out about this or that. And I say, okay, but I really don't care about the why. I just care about what it's actually doing.
Yeah, sure. That definitely, if people are hearing you just say that and you're a newer trader, I think that's an amazing part of your story, because I've been told by many people that if I want to go full time, first thing I need to do is buy a lot of shares so I can sell a lot of options and do a lot of things. And Mike is full-time trader. That's what he does to pay his bills in Southern California. You're a full-time trader, and like, you don't sell options, right? You don't sell anything. You don't care about CPI.
There's different strategies, right? So people that say own a lot of shares and sell against them, that's one strategy.
Yeah.
And it's not good or bad. It's good or bad depending on if that fits the way you trade.
Some people will say you have to do that to be a successful full-time trader, and you're living proof that you don't have to do that.
Well, yeah, I've never written a contract in my life.
Yeah.
Maybe I will at some point. It kind of intrigues me, but I'm not at the point where I want to or care about it yet. Kang, as far as I know, he's never done it. Maria, she'll do it like once a year, if that.
Yeah, yeah.
So and anyone that says Kang and Maria aren't, extremely successful traders,
Right.
they just don't know them, right? So you don't have to write contracts to make a living out of this.
Yeah.
I understand why they say that. And you have more things working for you than against you. So I get it, but I don't do that. Kang doesn't do it. Maria doesn't do that. I don't think Charlie will short common shares, but I don't think he writes positions with options. So there's a lot of people that just don't do that. And it doesn't mean we're not going to be successful. It just means that particular way of trading, for whatever reason, doesn't match our trade style or personality. So I don't do it. Doesn't mean it's bad. It just means I don't do it.
Right. And it worked, and it works for you, and you're not going in punching a time clock somewhere. You're like,
yeah, that's why I don't like to say someone's doing something wrong. I can, like, general practices, like, you don't average down losing positions. Like, that's something you can say is just something wrong. You don't do that, because historically it shows you if you do that, you're going to lose more money than you make. And yes, once or twice it's going to work out, but the times that it doesn't wipes you out. So something like that I can say is a bad strategy. When someone has a method of trading, you can't say, unless their method is, I used this the other day as an example, if a white car goes by you, you buy calls. And if the next car that passes you is black, you buy puts. That would be a bad strategy.
Right.
But if you use, like, someone asked me, like, what do you think of the strat? And my response is, I don't know. I've never looked at it. It's too many candle things to memorize. And it might only be 2 or 3 things to memorize. I don't know. I've never looked at it. I can't say it's good or bad. It's bad for me, right? Yeah. I don't want to take on that strategy. Some people can say they don't like the orb strategy. Okay. It doesn't mean it's bad. It's just bad for them. So I never want to look at someone's strategy and say that's bad or that's wrong. It's just bad or wrong for me.
Yeah, and that's what I like about your story, and why I like by doing all these events with you. And I mean, it's great because there's this idea that there's one way to trade successfully, and especially if you want to try to be full time, you have to cover these bases and you have to do all these things. And a lot of people do that and they do great with it, but not everybody does, right? So the takeaway isn't that people try to do what you do, but the takeaway is simply that there are different ways to do this. And those of us who are part-time, who maybe want to go full-time, just need to try things and find out what our thing is, because you found a thing that some people frankly say, oh, well, that can't happen. You have to sell options. You have to be a data, Hound, you have to do level 2. Have you ever looked at level 2 in the last 3 years, by the way?
As far as trading, no. I won't use it. I won't pull it up. It doesn't have any impact on me. But there's people that use it and are successful with it. So again, I can't say you don't need level 2. I can say you don't need it. I can say there's people that like it and want it. Yeah. I can't say using level 2 is a bad strategy. It's bad for me because I just don't need that information. But for other people, if it helps them, by all means, use it.
Yeah, that's right. You find what works for you, and when something seems to be working, you just dig into it and keep going down that route, and don't try to be someone else. And I love it.
The one thing I will say, so I got this in a DM today. Someone was saying they don't like to trade puts because they feel bad about, they have like a negative connotation to that. So what I would say as far as strategy is, I'm not going to say something's good or bad, right or wrong. What I will say is try to be as versatile as you can. In other words, this person sent me a message saying they don't trade puts because they feel like it's a negative thing. But the next line was that the last like 3 months, their portfolio has been going down and down and down. And my response to that is, yeah, you're trying to trade calls in an environment that calls for puts.
Yeah,
I shouldn't use the word calls. You're trying to trade calls in an environment that the opportunity is for puts. So what I will say is, where a strategy isn't necessarily right or wrong, what I would say is you want to be versatile enough where you can trade calls or puts if the opportunity presents itself. You can buy to open or you can sell to open if the opportunity presents itself. Like when we had that high, such a basic term, what am I looking for? The VIX. When the VIX was so high, it's a good strategy to sell to open. Right? Yeah. I don't do that. So there was opportunity for me to make a lot of money that I didn't have access to because that's just a type of trading I don't do. So I would say, to be an all-around complete trader, you want the versatility to buy to open or sell to open. You want the versatility to be able to trade calls, to be able to trade puts. If you want to be a complete trader, you want the versatility to trade options, common shares, Forex,
futures,
futures, right? So, hey, you know what? Things aren't moving in the options world right now. I'm going to jump over to Forex. Hey, you know what? Forex is really tough right now. I'm going to jump over to crypto. Crypto's doing this. I'm going to jump over here, right? So to be all encompassing just means you're going to be a more versatile trader. You'll be able to take advantage of more opportunity. But to say one is right, one is wrong, I don't like that phrasing of it. It's just what's right or wrong for you.
Why did they think puts were so they thought it's some kind of like betting against those companies or something?
Yeah, and I've heard the mentality, I've heard it quite a bit. Like there's a lot of people that won't trade puts, and they say if you're trading puts, you're betting against the company or against the economy or against America or against whatever, right? My thing is, let's say there's a very famous, very well-known, very loved company. If it's dropping for the day, I'm not trading puts because I want that company to go out of business. I'm not trading puts because I want everyone that works for them to lose their job. I'm not trading puts because I want that company's products to drop in price, or there's none of that. The only reason I'm trading puts is because the stock is dropping.
Yeah, and my 10.
That's all it is. There's no ill will whatsoever towards the company, towards America, towards the employees. It's just that to make money on this particular ticker, the opportunity is to go to the downside. That's the only reason I'm trading puts. And I don't feel bad about it because I know, there's another day where that ticker is just going to go straight up.
Yeah, and our put contracts are not going to make the company suffer,
Right.
It's an option contract, right? It's not going.
People aren't going to lose their jobs because I traded puts. I'm trading puts because the ticker just happens to be moving to the downside. So the problem, if you don't have that mentality, is that if everything's dropping for the day and you're trying to make money on calls, you're trying to make money on such a limited amount of movements that you have to be spot on with your entries and exits, and it's a very short opportunity, whereas you can just buy a put and let it ride down, 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 down. So again, there's nothing wrong with trading puts, in my opinion. When you take the emotion out of trading, there's nothing wrong with trading puts. You don't want the company to fail. You're trading puts only because they happen to be dropping that particular day. That's all it is. That's literally all it comes down to.
Yeah, I agree. I don't really I trade whatever seems to be, I don't ethically get involved like with companies I trade, right? Like some people, there's a comment, some people like will trade companies they love, and they'll only be kind of long oriented. And I mean, I guess I kind of see that how people apply ethics to it. But yeah, I don't know. It's not that I'm right and these people are wrong or vice
There's a
versa.
strategy for that, and there's ETFs that are designed around certain companies that have, whatever you want to call it, that feel good mentality and do good for the world and stuff like that. That's a method of trading, of course. For me, it's just a matter of very specific in how I trade, and all I'm doing is looking for opportunity, whether it's up or down.
That's right. And if
There's like, we'll take flow trades for companies I can't even tell you what they do. Like, I might not have heard the company before, but I know someone just put $800,000 into a contract that expires in 4 hours. I'm going to trade it. I have no idea what they do, but I'm going to trade the ticker because the ticker is presenting an opportunity. That's literally all it comes down to.
you remember that a couple geo flows back in the day in the fall?
Yeah, I'm actually still in that one, down 94%. That's in the small account, and that is only the second loss of that account. It's not a loss yet, but I wrote it off. So I do know geo very well.
You need to preserve that 6%, bro. That's going to nothing.
That one will likely go to zero, but again, in that account, that's going to be only the second loss I've taken in that account. So, and it's down 94% now, so it's not like I'm going to close it now. It's just it's going to zero, or if there's some miracle, I get some of that back, cool. But in my mind, it's already written off.
Well, I remember when that flow came through, and in the room, a couple of people were talking about how they won't trade it because it's privatized prisons, right? And there's all these issues with private prisons, and I had no idea what it was. I mean, I was like you, I was kind of in and out quickly, but yeah, I mean, I agree that I don't necessarily get super involved. I'm like you, sometimes I don't even know what the tickers are, but I also understand that offends some people. I can see that point of view. People say.
It does. Like, it's kind of like, I don't want to profit off of someone else doing something that I don't agree with. I get that.
Right. The private prison thing, I mean, there's issues there. There's no doubt about it, right? So
yeah, if you looked at that flow and said, that looks like really good flow, but I don't want to make money off of a company that they profit off of locking people up, I don't have a problem with that.
Nothing wrong with
if
that.
you want to skip that because that affects you morally, I'm good with that. Skip that ticker. There's plenty of others out there. Yeah. It's not a matter of like, I'm going to yell at you and be like, no, this is an opportunity. You've got to take it. If you don't like what they do and you don't want to profit off of them profiting, skip that ticker. There's plenty of other stuff to trade. I'll never get mad at someone saying it's against what I believe in, so I don't want to, contribute to that company. I'm good with that. Just don't contribute to that company. There's other stuff to trade.
Yeah, and the opposite way too. Like, I would add to that person who DM'd you, like, if you are for whatever reason only long oriented and you don't want to buy puts, then you just got to wait. Don't buy calls until it's time to buy calls.
The market we're in right now, yeah, you're going to have a limited time. Well, I mean, if we're chopping, you have limited time for calls and puts. So, but in a trending market, if we're going sideways or trending down, it's one of those things where you just have to commit to not opening trades. Or you have to wait until that long setup is going to be advantageous for you. And right now, long and short can be advantageous. So if you're only looking for longs, this might be a point in the market cycle where you're just not trading much. Or you're trading on good news, or you're trading on a day where the indices are up and a bunch of tickers are up and maybe the semi sector is up, stuff like that. But overall, you're going to be trading less because the opportunities are up and down. So when the opportunities are primarily up, you're going to do very well. But right now, that's not the case, so you're just going to be trading less.
I think a great example of that is Tesla. I think not that Tesla is up or down, but just there are a lot of people who trade Tesla with a long bias simply because they're such huge fans, of Tesla and Elon and whatever else, innovation, whatever they want to say. But there's a lot of that going around. I think a lot of people are very, very option or call oriented when it comes to options on Tesla, when maybe they shouldn't be, because they can't bring themselves to like buy a put on what they consider Elon. A lot of people just can't do that. So I think
here's where there's a solid distinction though. Like, so I think Elon's one of those people that he's kind of just genius, right? First of all, he started the Tesla, and you can argue this and that, but he's changed the industry. Then he goes and says, you know what, I like rocket ships. I'm going to make a company based on rocket ships. And then he
Yeah,
says, you know what, I'm going to dig tunnels under the earth, and he starts another company. The guy is genius with what he can create. Here's the thing, though. I'm a trader. So if I love Elon and think the stuff that comes out of his mind is just incredible, if his stock is going down, I'm going to trade it to the downside. I am a trader. Now, if you're an investor, you can say, I believe in Elon. I believe in his vision. I'm going to buy for the long term and just go to the upside. I will not short it. That's fine, because you're investing in the company. As a trader, we're not investing in the company. We're literally just taking advantage of whatever conditions that company offers.
Short-term profit opportunities. Will you ever buy a Tesla bot? What do you think about the Tesla bot?
A Tesla what? The cars themselves?
No. The robot, the Tesla bot. Have not heard about that?
I have not. What is the Tesla robot?
Just Google later. It's a bipedal. It's a robot. He calls it Optimus, the Tesla bot. And they're designing this robot to just to do tasks for humans that humans don't want to do. You should look it up. The Tesla robot. It's the new.
I have no need for it, but I kind of want it.
It could like clean your house, you know.
Oh, I'm definitely getting one then, because I hate doing that. You kidding? It's a Saturday or Sunday, the sun is out, and I got to clean up some stuff around here? Nah, Tesla bot, do your thing. I'm on the beach.
Yeah, get the Tesla bot to come clean up or whatever. Yeah, Google it. It is wild. It's interesting. I don't know much about it, but it's a thing that is in production, or sorry, not production, but it's a thing that they hope to be in production one day. And I'll say this, unless you got anything else, the thing you need to do right now is go to the beach, because we have arrived at the end of our amazing conversation. What else you got? Are we good? What do you think? What do we want to leave the people with?
Well, let's leave the people with, this is about what went wrong. So what we focused on today was basically chasing. So what I'm going to leave today with is that, and this kind of goes true with the small account also, and KJ touched upon this, there's always another trade out there. There's always, no matter how many trades you miss, there's always another trade out there. It might not be today. Maybe there's an hour left in the market and you're trying to fiend for something. It may not be today in that last hour of the day, but tomorrow there's always another trade out there. So if you're chasing something and you think to yourself, this might be a chase, skip it. That's okay. If you're in a $500 account and you're like, oh man, I could put a $400 contract in this, and if it works, it's going to double the account. If it doesn't, it's risky. You can skip that trade. There's always going to be another trade. So come up with your rules. Come up with your risk tolerance and whether you're willing to break a rule and accept the consequences of the downside if you do that. And then once you have that all laid out, just stick to your rules. And if something doesn't match those rules, there's always going to be another trade that will.
Yeah, that's right. There's no rush. There's no rush. The market's not going anywhere. However, this connection might have gone somewhere. You still with us?
Still with?
Okay, yeah, no, it cut out for a minute, but yeah, you're right. Don't force things. Let us know if you have a trade you want us to talk about. Tomorrow, T Lamb is going to be on Riverside Chats. Can't wait to talk to him. We had him on What Went Wrong a couple weeks ago. It was so much fun. That guy is going to be a blast tomorrow. But we'll be back in 2 weeks, everyone. And send us trades, send us comments. So happy you guys came. There's still people here. We appreciate it. Thank you again. And we will see you guys around the Blackbox Stocks community. And if you're here and you're not a member of Blackbox Stocks, check it out, blackboxstocks.com. Email me, email Mike. We'd love to tell you guys about it. And yeah, Mike, I appreciate it, and hope you have a great time. Are you actually going to the beach, or are you going to do something else on a Saturday for a change?
I was on the beach earlier before this episode. I came in to relax a little bit, and I will be heading right back out to the beach. It is a beautiful day today. But as always, I love hanging out with you and chatting and you know, coming up with some stuff to look at on a Saturday. I don't do a whole lot of weekend market stuff anymore, so this is a way to kind of keep my brain fresh on the weekend so I don't become mush and then have to kick start it on Monday morning. So love hanging out with you on a Saturday, but it is now back to the beach time, so I will see you guys Monday at the opening bell. River, once again, thanks for hanging out. I love doing this with you. I'll see you guys on Monday.
All right, same here. See you then. Have a great day, everybody. See you later.